All right, folks, today I'm breaking down the basics of the stock market. So if you're a beginner, grab a seat and let's dive in. First things first, what exactly is the stock market? Think of it as a marketplace where investors buy and sell shares of companies. These shares represent a small ownership stake in a company. When you buy a share, you're essentially buying a tiny piece of that company. Now, how does it work? Companies issue stock to raise money for various activities, like expanding their business or launching new products. Investors, like you and me, buy these stocks hoping that the company will do well and the value of the stock will go up. If the company performs well, the stock price rises and you can sell your shares for a profit. Stocks are traded on stock exchanges. The two most famous ones are the New York Stock Exchange and the Nasdaq. These places act as a middleman between buyers and sellers, ensuring that trades are fair and transparent. Now, the price of a stock is determined by supply and demand. If more people want to buy a stock, the price goes up. If more people want to sell, the price goes down. It's that simple. But remember, the stock market can be volatile. Prices can fluctuate based on news, economic reports, and even rumors. That's why it's essential to do your research and invest wisely. To sum it up, the stock market is a place where you can buy and sell shares of companies. It works on the principles of supply and demand, and while it can be risky, it also offers opportunities for growth. So that's your quick guide to understanding the stock market. Stay curious, stay informed, and happy investing. All right, see you next time.